Hello everyone and welcome back to the channel. Guys, in this video I'm going to explain to all of you how to manage naked put options. Okay, there are quite few ways we can manage our trades when it comes to naked puts, and of course you can also apply this strategy here to cash secure puts as well. Okay, it's all depend what is the outcome you are expecting or waiting for your trade to happen. If you want to get a sign, that's fine. You just take the assignment, hold the shares for the long term, sell covered calls, transform them into a covered strangle. Let's say selling a covered call, another put, and holding the shares. So you have here the upside covered here by the shares on the naked call, and you have another put here. If the stock drops, you can have 200 shares. There's plenty of things you can do, but what I want to show you guys here in this video in particular, it is, guys, how we're gonna roll out, and down. Okay, roll out, one of the most common ways we can do. Why? Because the further in time, let's say for example today it is today is 1st, okay, of October 2024. So if we were to close a naked put today, okay, let's say we pay here $1 to close this trade, we are going to have more time value, okay, in other words extrinsic value, in a further date naked put options. Why? On 1st of November of 2024, okay, the same naked put here, let's say strike price here of $100, will be trading for more money. Why? Because of this time value here, the 30 days. So in other words, the option or the stock has more time to get in the money or to get out of the money. Okay, and by the way, this is what I explained in the full playlist on how to trade options for beginners. And I'll put a card up here somewhere, left, right, but also there are the links in the description so you can click and learn for free. Especially if you are a beginner when it comes to trading option. Guys, people charge you fortune for this, okay? Very simple, very basics, but guess what? From here, you can improve yourself. And I'll be keeping adding videos after videos every single day, every single week with the playlist. So you can learn everything when it comes to trading options for free. The only thing I ask you guys, if you like the content, subscribe to the channel, leave your like and leave your comments as well, which helps the channel a lot. Okay, anyway, without further ado, let's go into my TastyWorks platform. Let's say for example we're gonna use here IWM, okay, which it is of course the ETF that tracks the performance of the Russell, okay, 2000. Anyway, so as you probably know, you have watched the playlist how to trade options. You know what DTE means. You know the date expiration here that we have on 18 of October, on 15 of November, 20 of June next year. And of course, if you click here, let's say for example we're gonna select a 45 days, very standard, okay, very standard. Let's say for example we open a trade 45 DTE, and then 45 days is gone past. So you're gonna go here and open the option chain for today. Okay, remember we start the trade 45 days ago. All right, 45 days gone past, and at that time we sold the $222 and we got, let's say, X value, whatever that value might be. Okay, so the $222, if we were to buy back this put option here, that will cost us, as you guys can see, $1.81. It doesn't matter. Let's say we collect here $1 in the beginning, but now it's trading the money. It's trading for $1.81. Okay, it doesn't matter how much we got in the very beginning. Of course, you can help you to drop your base case, your base cost. That's fine, but we need to buy back this option. Okay, today, because it's going to expire today. So we're going to buy here today with 0 days to expiration, and we're gonna keep the dream alive, and we're gonna sell the same strike price further in time. So like for example now we're gonna go another 45 days all the way up to 15 of November. We're gonna open the option chain. we're gonna go to the same $222 strike price, and we're gonna click sell. Okay, as you guys can see, the further in time option is trading for way more than the option that is expiring today, which is trading for $1.85. So basically, guys, the difference here is pretty much what we called time value, or in other words, EV. Okay, just the short thing for extrinsic value. All right, of course, there are some intrinsic value here in this option because it is trading the money. Remember, only options that are trading in the money has intrinsic value. All the options that are trading out of the money has only extrinsic value. Okay, and some of the options that are also trading the money has also extrinsic value. Okay, but anyway, that's not the part of this video right now. So basically, 45 days ago, we opened the trade with the strike price of 222. We collect here, let's say X dollars, okay? And then today, we're gonna buy back the $222 strike price. We're gonna pay $1.85. And for us to keep the dream alive, we're gonna open the same trade with the same strike price, but this time, we're gonna buy ourselves some more time. We're going to buy ourselves 45 days again for the stock to recover and eventually trade above our strike price. So we can close this thing here for a full profit or maybe for a scratch. Okay? Depend on your trading plan. I always, guys, close for a profit. And that's what I say to you guys, very, very crucial. You stick with the ETFs if you don't have a clue what you're doing in the beginning. Once you know how to manage, how to close, how to enter, how to exit your trades, guys, that's it. The sky is the limit, okay? And of course, remember, we collect here X dollars, and now we're collecting $5.72 extra, okay? So basically, the 222 strike price, okay, we have to subtract here our X dollar that we got at the very beginning, which it is here our P1 of our first premium, minus our X2, which it is X2 which it is this thing here, 572, which our P2. So if this thing here was $1, so our break even is going to be 222 minus 5.72 minus $1, so $6.72. So basically, we have to subtract 222 minus $6.72 to get our break even. Okay, so our break even now, let me get my calculator here to be exactly. So 222 minus 5.72, sorry, 52 minus $1. So basically, our break even is 215, okay, 0.28. Okay, 0.28. This is our break even, despite the fact that it's trading all the way up here. All right, but of course, we're not doing anything here right now. We are just rolling this trade out in time, nothing else. Okay, we're not doing anything here in terms of rolling the strike price down. We're just rolling in time. We're just buying ourselves here more time. That's it. So basically, this is rolling out your trades, guys. Keep the dream alive. And then you might say, oh, but you are closing the trades because you are taking the loss here and you open the same losing trade. No, it's not. Okay, this is more than that. Why? Because we keep in the same ticker symbol. We still believe that IWM is going to recover. That's the thing. That's the difference between, oh, I'm gonna put a stop loss because I know this is the support. No, you don't know. You don't know, I don't know, nobody knows. When you put a stop loss on something like IWM, you're trying to guess the bottom. I don't care less whether the IWM is going to be trading the next 30 days, 40 days, 6 days. Who cares? Because I have enough buying power here to sell another naked put. I have enough buying power here to sell another naked put. And I still have enough buying power to sell another naked put. And I'll keep lower my base cost until IWM recover and I get out of the trade. But what about if IWM go to zero? If IWM goes to zero, my friend, guess what? You and myself are going to have way more things to be concerned than this trade here. Because, of course, the market we always recover. But what if we're gonna bear market for 2 years? Guys, we're still lowering our base cost. I trade options with a long term in mind, because if you don't have the long term in mind, guess what? This channel has nothing to offer to you. Because if I got a sign here, on something IWM, by the time I get a sign for the 5th time, guys, my base cost is gonna be all the way down here at 30% discount. From here onwards, I'm holding this thing here long term, the shares. I transform here a naked put into a DCA in the way down, and now I'm transforming this thing here into long-term investing. Who doesn't want to hold IWM, SPY, triple Qs, whatever for the long term with a 30% discount price? Thank you very much. I'll take that all day long, okay? So this is just straightforward. But there's a but here. Now, actually, we just what? We just roll out in time. Simple. Thank you very much. Nice and done. Collecting extra premium, lowering our base cost, which it is our strike price minus P1, minus P2, minus P3, and so on. You can roll this for many Ps. Okay? It's your choice. But what you can do here is we can roll out and down. Down, I mean, is we can try to get our strike price downwards. Okay? In this case here, if we get the strike price to 221, it's still, as you guys can see, receiving here like what? Less 50 cents. We went here from 570 something to 526, as you guys can see. If we drop to 220, 219, 218, guys, we can drop our strike price all the way down here. Let's see if we can get it here. This is data after market close. Okay, don't know if the data might be correct. I don't know if the data is actually the right data from the previous day, which was yesterday. I'm not sure. But anyway, so because there's one thing you need to pay attention. Remember, our strike price was 222. Okay, the reason why we are able to roll out and down is because the current stock price is trading very close, as you guys can see. 221 is very close to 222 strike price that we had. Okay, so basically S note, which it is the price of the stock right now, in this case the ETF IWM, is roughly equals, okay, to our strike price. This is very nice to close and to roll your trades. And we here, guys, we buying. There's no more time value. All the time value have dissipated. We don't need to buy that back. We don't need to pay for that. Okay, that's the things you guys need to take in consideration. There's no time value in this option. The stock price at S note today is pretty much equals to our strike price. That's the things you need to pay attention. That's why we are able to roll all the way down here. Okay, so you pick your poison. So basically now we're gonna still collect here a credit, 11 cents, because our goal now it's not to collect more premium, but rather to decrease our strike price, because we are rolling here out and down. Okay, this is one of my favorite one. Why? Because I want to get a sign all the way down here. But if I'm very bullish on a particular product, IWM, EWZ, or SPY, whatever it might be, guys, I want to take the premium. I want to keep collecting premium. By my P10, my 10 rolling, I might have here $30 per share in premium, minus 220 E2, right? Guys, this is what, 192, something like that. It's almost like what? It's almost 20%, something like that, top of my head. It's amazing. Who doesn't want to buy SPY that was trading at the all-time high and you're getting now a 20% discount price? Just through trade management. If you know how to manage your naked puts and your cash secure puts, you'll be 90% ahead of everybody else. Okay? But the best trade management, I'm gonna explain to you guys why now. Okay? If you are watching this video this far, congratulations, because now is the third thing you need to learn. When it comes to naked puts, cash secure puts, And even naked calls, which I don't do very often. I really don't like. I do naked, I do calls with covered calls or covered strong, no naked calls. Okay, guys, the best trade management of all this is not just roll out. Okay, roll out or roll out plus down. The best trade management when it comes to the being an option seller is this thing here. PS. If you know how to deal with this, you can do as many rolls as you can. Like I said to you guys, I can buy IWM down here. I can sell naked put down here, down here, down here, down here. Why? Because all my trade management was done when I press the trigger, which it is the proper position size. Because if I go 10% here, 10% here, guess what? I'm running out of buying power. I cannot manage this trade anymore. I'm gonna have to be forced to take the loss, and the stock market is going to recover, and I'm gonna be left behind. That's what happened to everyone that sells option and make loss. If you put 10 people in a room that lost a lot of money trading options, they have one thing in common: wrong position size. Because the thing is, you can keep your dream alive forever. Let the Mr. Market chase you forever. You can still roll in your ETFs, naked puts or cash secure puts forever, because you're always gonna get more premium on a further date option contract, of course. But you have to have position size in place, because if you say, for example, I'm gonna open my naked put today or my cash secure put, whatever. If it goes down, I can sell another put, roll down, roll out. You pick your poison. I'd rather to collect premium. Why? Because I'm always bullish in the market, no matter what. Okay, that's fine. And this is exactly what happened, guys. And this is exactly why I made this money here, as you guys can see on the screen right now. The reason why last year I made almost $500,000, okay? I was doing the same strategy, guys, on Meta. When everyone on YouTube was talking about that TikTok was going to steal the lunch from Meta, I look at the balance sheet, I was like, what? What? $10 billion in free cash flow. Thank you very much. I'm going to do my rolling, and I'm going to lower my base cost, and I'm going to collect premium. At one point, Meta was trading, if I'm not wrong, top of my head, guys, $90 or $125. My base cost was $107. Go and check it out. How much the price of Meta right now. I closed this thing here at $315. I made almost 200% on my trades. Massive. Applying the same strategy, okay? But there was a stock. Stock eventually, or theoretically speaking, can go to zero. Right? But ETF, things like that, guys, it cannot go to zero. If the SPY goes to zero, forget about all the rest of the problems you might have in your life. You don't have any problem anymore. Okay, if the SPY or IWM goes to zero. But you get the point, okay? Keep the dream alive. But look at this. I got a stop loss. I'm going to put a stop loss. Good luck for you. You put a stop loss because you're trying to think that you have something special about you to guess where the bottom is. I don't care less. If I have done that in 2023, I had closed all my Meta, all my trades for a loss. Guys, I even made money on PayPal, which is still down like 30-40%. So you guys can have an idea. EWZ dropped a lot. I still made a lot of money on EWZ doing the same strategy, keeping the dream alive and keep it rolling and manage your trades with the proper position size. And that's how you come ahead as an option seller. Okay? That's how you come ahead as an option seller. Thinking long term. The worst case scenario, we're gonna sell our fourth cash secure put here or naked put. We don't have any more buying power. We're gonna hold now for the long term. But by the time that happens, we get a sign, we're gonna be, let's say, 20+% down here. Thank you very much. I hold long term. For now on, guess what? It's the patient game, nothing else. Anyway, I hope you guys appreciate. I hope you guys do understand. And if you have found any value, guys, don't forget, subscribe to the channel, click on the links below to learn one of the best strategies that I have, which covers strong. And of course, the cash secure put, we can use a naked put if you have a margin portfolio, but the concept is still the same. Okay, you can download the free trading journal, all those good stuff. Keep the dream alive with the proper position size. You can still make money trading the worst stock ever with a proper position size, and you can lose money trading the SPY. In my point of view, the best product ever to trade options, and you can still lose money with the wrong position size. Position size is the main thing, guys, when it comes to sell option. Put that in your mind. Position size, okay? All the best, stay safe, and happy investing.